from MrTopStep, Top Notch Trading, stepping back in today. Last Friday, I finally showed up after a couple of months of missing in action, only because I needed to tout why those bears are now packed into hibernation. The Packers smoked them, to be honest with you. The game was closer than it really looked. So overall, the better team did win. I put out a very big, important piece of information of a date objective. And here it is. I recommended that come by January 28th to maybe February 8th, we were going to see a high. Now you can go on the charts and look at this ascending right triangle that crossed that day. And for you novices or starting guys, or even you old professionals are looking for some of this type of information, you can go on a weekly Emini chart, find the low of July of 2010, the year low, when it spiked back up, triple bottom back in August. That was our trend line that takes up higher. But the last high was made in June, and that's when it crossed over, which called an ascending right triangle. When it traded a couple days up and over that trend line, it never settled above it. But the one day it did settle, it traded 5 days, 6 days. And then out of the blue, they had some covering, and we saw a settle underneath that that trend line that was straight across. Well, when I looked at the volume, it was the lightest volume traded in that week's period, which was a bullish signal. We came in the next day on the regular session, never saw it again. So the rally has been since September 16th to 20th, and when these things crossed, and you can see it, go on these charts, all the way to what? January 28th. What's today? Ta-da! Then, to go to another idea, you go to the first year high. It took us to the first year low. And then we made a nice year high in April. And then in July, we made that year low that found our bottom, and that was it. That was a start of something. But then when they triple bottom before extending the new year highs, that was our trend line up. And our upside on a continuation. Go to a chart. Go to a weekly continuation of the E-mini S&P. Take the April high to the July low, and the upside 382 objective on a continuation said 98.5. Well, today, ladies and gentlemen, our high is 99.40, and it went up there and went achoo. Oh, and also, it is January 28th. I'm not saying all hell's going on to the downside, but right now, this could be the start of it. It targeted for this date. I'm not quite sure that what's going to really go, but if we're going to see this, we're going to finally take that objective ascending trend line right now. And guess where that baby is today? You don't want to know. It's over 100 handles away. Is that going to happen? I'm not quite sure, because there are red flags. On the 18th of January, after the close, we had Apple come out. What bothers me is that the NASDAQ future spiked 14 handles above its high that day, 15 handles from its settle. Their target is still 46.5. Are they going to leave that in the trail of dust? One never knows. But the S&P future did what it was supposed to. Let's see what happens. If they go, I'm looking for an objective today of 1258. And I'm not even sure if that's going to hold.